Bismillahirrahmanirrahim. Assalamu alaikum. Viewers, you are watching my YouTube channel Finance Specialist. Viewers, in this video, I will talk about treasury stock or treasury shares. In this video, I will cover the meaning of treasury stock, accounting entries regarding purchase and sale of treasury stock, followed by some important points to consider while dealing with treasury stock related transactions. Viewers, treasury stock may be defined as shares of a corporation's capital stock that have been issued and later reacquired by the issuing company but that have not been cancelled or permanently retired. Treasury shares may be held indefinitely or may be issued again at any time. Shares of capital stock held in the treasury are not entitled to receive dividends, they are not allowed to vote, or share in assets upon dissolution of the company. Corporations frequently reacquire shares of their capital stock by purchase in the open market. Paying out cash to reacquire shares will reduce the corporation's assets and the stockholders' equity by the same amount. One reason for such purchase is to have stock available to reissue to officers and employees under stock options or bonus plans. Other reasons may include a desire to increase the reported earnings per share or to support the current market price of the stock. In the computation of earning per share, shares held in the treasury are not regarded as outstanding shares, so we need to subtract them from the outstanding shares. Purchases of treasury stock are usually recorded by debiting the treasury stock account with the cost of the stock. The purchase of treasury stock should be regarded as a reduction of stockholders' equity, not as the acquisition of an asset. The treasury stock account should appear in the balance sheet as a deduction in the stockholders' equity section. Recording purchases of treasury stock we can understand with the help of this example. This example will remain continue for other parameters regarding treasury stock transaction. Suppose that T Corporation requires 1,500 shares of its own $5 per stock at a price of $100 per share. The accounting entry to record this transaction is as follows. Treasury stock 150,000 and cash 150,000. So treasury stock will be debit and cash will be credit. How do we get this 150,000 amount? By simply multiplying shares of treasury stock multiplied by its purchase price. When it comes to reissuance of treasury stock at a price above cost, we need to consider this point. When treasury shares are reissued, the treasury stock account is credited for the cost of the shares reissued and additional paid in capital from treasury stock transactions is debited or credited from any difference between cost and the reissue price. Let's have a look at this example. Assume that 1,000 of the treasury shares acquired by the corporation in the previous example at a cost of $1,000 per share are now reissued at a price of 115, meaning company is issuing its treasury stock at a higher price than its purchase price. The entry to record the reissuance of these shares at a price above cost would be first cash debit. Cash, since company is reissuing 1000 shares at a price of 115, so we can multiply 115 by 1000, so it will give us 115,000. Treasury stock will be credited by 100,000. It is the actual price, purchase price of the company, which was $100. So $100 multiplied by 1000, so it will give us 100,000. And additional paid in capital, treasury stock transactions, it comes 15,000 because company is making $15 extra premium on each share. So when 15 is multiplied by 1000, so it will give us 15,000. So whenever we need to record an entry comprised of selling treasury stock at a higher price than a cost, so we need to record entry this way, the way you can see on your screen. If treasury stock is reissued at a price below cost, we need to consider this point. If treasury stock is reissued at a price below cost, additional paid in capital from previous treasury stock transactions is reduced or debited by the excess of cost over the reissue price. Let's understand this with the help of given example. Assume that T Corporation reissues its remaining 500 shares of treasury stock. The cost of those shares referred to previous example, it was $100 per share, and the company is reissuing its remaining 500 shares at a price of $90 per share. So the entry would be cash debit by 45,000, additional paid in capital treasury stock because there is a loss on the share. The company is selling its share at a lesser price, so it is $10 less than the cost, so 10 multiplied by 500 will give us 5,000. So in this case we will have to debit additional paid in capital by 5,000, and we will have to credit treasury stock by 50,000, and in the narration we can write sold 500 shares of treasury stock which cost $50,000 at a price of $90 each. If there is no additional paid in capital, for instance, from previous treasury stock transactions, the excess of the cost of the treasury shares over the reissue price may be recorded as a debit to the additional paid in capital common stock account. Some important points to note here is, despite a lack of theoretical support, a few corporations do classify treasury stocks as an asset on the grounds that the shares could be sold for cash just as readily as shares owned in another corporation. The same argument could be made for treating unissued shares as assets. Treasury shares are basically the same as unissued shares, and an unissued share of a stock is not an asset. So it is not correct to treat treasury stock as an asset. So it is not an asset. In case if there is no profit or loss on treasury stock transaction, so in this case notice that no gain or loss is recognized on treasury stock transactions even when the shares are reissued at a price above or below cost. A corporation earns profits by selling goods and services to outsiders, not by issuing or reissuing shares of its own capital stock. Any changes in stockholders' equity resulting from treasury stock transactions are regarded as changes in paid in capital and are not included in the measurement of net income. There are some restrictions of retained earnings for treasury stock owned. Purchases of treasury stock like cash dividends are distributions of assets to the stockholders in the corporation. The distributions to stockholders, including purchases of treasury stock, cannot exceed the balance in the retained earnings account. Therefore, retained earnings usually are restricted by an amount equal to the cost of any shares held in the treasury. These days, corporations repurchase huge amount of their own common stock. As a result of huge buyback programs, treasury stock has become a very material item on the balance sheet of many corporations. These large buyback programs serve several purposes. First, by creating demand for the company stock in the marketplace. These programs tend to increase the market value of the shares. Also, reducing the number of shares outstanding usually increases earning per share. When stock prices are low, some companies find that they can increase earnings per share by a greater amount through repurchasing shares than through expanding business operations. When we talk about cash effects, transactions between the corporation and its stockholders are classified in the statement of cash flows as financing activities. Accordingly, the purchase and reissuance of treasury stock results in cash flow from financing activities. When treasury stock is purchased, a financing cash outflow is reported in the statement of cash flows. When treasury stock is reissued, the amount of cash received is reported as a financing cash inflow in the statement of cash flows. Treasury stock transactions do not give rise to gains or losses. They have no effect on the corporation's net income. Any difference between the purchase price of the treasury stock and the cash received when it is reissued is reported as an increase or decrease in the corporation's paid-in capital. Viewers, I hope you would have understood the meaning and the related transactions when it comes to record treasury stock purchase or its reissuance. In addition to it, you would have understood the important points to note regarding treasury stock transactions. Thank you very much for watching this video. If you are new to this channel, you are requested to like and share this video and subscribe to the Finance Specialist channel by clicking on subscribe button and selecting the select all option, followed by pressing the bell icon to get the notification of upcoming videos. You can share your thoughts, suggestions in the comment section. Stay blessed. Thank you very much.